NIO stock has been up by a factor of 10 since the beginning of this year, a phenomenal return for us shareholders of NIO. The stock continues to rise, outperforming the broader stock market by a wide margin. Even as the S&P 500 was down sharply this past week, NIO actually went up. There seems to be no end for investor interest in NIO stock. Today on Stocks to Buy, let's talk about what is driving this upward momentum and how soon will this stock hit $100. Please don't forget to subscribe. Earlier in the month, JP Morgan upgraded their target for the stock, and soon after that, Morgan Stanley joined ranks and updated their rating for NIO stock. Just a couple of days ago, they came out with a report titled "A Strong EV Leader in the Making," in which they updated their forecast after NIO reported better than expected Q3 delivery numbers. In fact, the company is expecting to set delivery records for the next several quarters, as we will explain later in this video. Multiple analysts and banks are upgrading their forecast for this stock for one very important reason: the speed with which NIO is achieving its strategic and investment targets is defying all expectations. This is an extremely important point for investors. The momentum of NIO stock will closely track the momentum of the company's production and financial performance, and because the company is beating expectations, the stock price will follow, which means that the stock has a lot more room to grow. Additionally, due to the positive energy driving this stock, the capital markets will be willing to finance any future capital raise. As we witnessed this past August, the company had no problem raising $1.5 billion to finance future expansion and buy back some of the shares in its Chinese subsidiary NIO China. NIO is slowly starting to build a moat around its business in the local Chinese market. Two factors really stand out: the company's image as a premium maker of EVs and its innovative features such as battery as a service. The premium image allows it to stand out among other automakers such as XPeng, BYD, and Li Auto. This premium market positioning allows NIO to enjoy a higher profit margin compared to its competitors. The battery as a service allows buyers of its cars in China to buy a NIO vehicle without a battery and then lease the battery on a month-to-month basis, therefore lowering the purchase price of the car. Since batteries are the most expensive component in an EV, this is a very smart strategy. Analysts expect NIO to reaffirm its current market position through industry-leading products such as its SUV and also its innovative services and self-driving technology due to its partnership with Intel's Mobileye unit. No other Chinese EV maker can compete with NIO on all these fronts. We believe these factors will drive the stock into hypergrowth over the next 18 to 24 months. Therefore, a projected stock price of $100 by 2022 is realistic. The NIO of today will be very different from the NIO of 2022. The company will keep on gaining more and more market share of the Chinese EV sales in what is already the largest automobile market in the world. On the product front, NIO seems to be setting the trend. Its recently unveiled coupe SUV, the EC6, which has been very well received at the market with better than expected orders placed for the vehicle. Although the model will not be available to consumers until early 2021, interest for this particular model seems to be growing. Another long-awaited model will be its sedan, which is expected to be revealed in January 2021 on NIO Day. It will be the company's most affordable product, and we expect demand to skyrocket. NIO is also expanding its geographic reach in China by increasing its presence in non-license restricted cities. Compared to its local competitors, NIO is building up a more diversified sales and distribution footprint. This will allow the company to sustain a higher sales growth momentum over a longer time period. A broader market coverage will give them an edge over other competitors. China is a big geographic market, and the heavy lifting done by NIO right now will ensure its continued growth trajectory in the years ahead. NIO is also aggressively moving ahead with its autonomous driving feature, easily beating out other local EV makers. It only lags Tesla in this feature. In fact, NIO is planning on developing its own AI chip to aid its autonomous driving feature. If this plan comes to fruition, it will catapult NIO to become one of the major autonomy-enabled EV makers, changing the competitive landscape in the Chinese EV market. Developing an AI chip similar to Tesla will be an expensive and technologically difficult endeavor for NIO, but it will have huge positive implications for its vehicles and establish the company as a globally competitive EV maker. We believe autonomy could become a huge revenue driver for EV makers, and with NIO leading the way in the local market, it will have huge implications for the stock. Autonomy revenue alone could add a whopping $50 to the stock. We will be doing a video on this very soon. Please subscribe so that you don't miss out. Adding to the stock momentum is the company's plan to increase its production capacity threefold by the end of 2021. The company has been managing its growth on all different fronts very well, and that is reflected by the rise in the stock price. If the management of NIO is able to execute at this pace for the next few years, another 10x rise in the stock price will definitely be plausible. NIO is slowly but surely cementing its position as the leading EV maker in China, which could make it a dark horse candidate to become the next Chinese tech giant, similar to what Tesla is for the US market. Having NIO stock is a must-have for any long-term stock portfolio. Folks, please let us know what are your thoughts on NIO stock in the comments below, and please don't forget to subscribe and give this video a like.